Ladies and gentlemen, good day and welcome to the GPT Infraprojects Limited Q2 FY26 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Atul Tatia, Joint Managing Director and CFO of GPT Infraprojects Limited. Thank you, and over to you, sir.
Thank you. Good afternoon, everyone, and a warm welcome to the GPT Infraprojects Limited conference call for the second quarter ended September 30th, 2025. I hope you all had the opportunity to review the financials as well as the presentation released yesterday. I will briefly cover the key highlights for the quarter. Before we begin, I would like to take a moment to honor the memory of my father and our beloved chairman, Shri Dwarka Prasad Ji Tantia, who left for his heavenly abode on August 17, 2025. He was our North Star, a true Karma Yogi whose life was a testament to purpose and perseverance. He showed us that greatness lies in humility and that integrity is the finest legacy. A true leader who lived each day with strong sense of family values, and his legacy in business and community service is profound. Through his vision and actions, he left our world richer, wiser, and better than he found it. We thank everyone who reached out to us in this time of grief. We pray that his noble soul finds eternal peace at the lotus feet of Lord Narayan. Now moving on ahead to our financial performance for the second quarter and half year ended to September 30, 2025. On a half-yearly basis, revenue grew by 12% both on standalone and consolidated basis, with revenue from operations at 579 crores on standalone level and compared to rupees 517 crores last year. And on a consolidated basis, revenue stood at rupees 591 crores compared to rupees 529 crores last year. In both the standalone and consolidated numbers, we have set a target of 20% growth this fiscal year. This growth will be majorly driven by significant execution in the infrastructure segment, which accounts for nearly 90% of our revenues. Our standalone EBITDA for the quarter stood at rupees 42 crores compared to rupees 40 crores, representing a growth of 4.5% YOY. And EBITDA for the half year was 84 crores compared to 74 crores last year, that is a growth of 12.5%. In terms of consolidated EBITDA, the same came in at rupees 43 crores for the quarter ended September 30, 2025, compared to rupees 33 crores last year, representing a growth of 28%. EBITDA for the half year stood at rupees 89 crores compared to rupees 67 crores on a consolidated level last year, representing a growth of 33%. We are confident of maintaining a long-term EBITDA margin of 13%, which we have guided historically as well. With the improvement in revenue, the operational efficiencies have helped us in ensuring the long-term EBITDA, and we expect the same to be maintained going forward. There has been an increase in the profit after taxes with consolidated PAT for H1 FY26 at 45 crores, growing by 32% from 34 crores in H1 FY25. Standalone PAT for Q2 FY26 was rupees 44 crores, increasing by 12% compared to rupees 39 crores last year. Now in terms of our segmental performance. Our infrastructure segment reported revenue of rupees 543 crores for the half year ended September 30, 2025. This segment continues to be the backbone of our business, contributing almost 94% of our total revenues. The key contracts for the infrastructure segment continue to perform well, with contracts like NHAI, Ganga Bridge, Prayagraj, Mathura Jhansi, Majra, Baikala driving a major part of our revenues. The segment has an order backlog of rupees 3153 crores. The sleeper segment generated revenues of 43.8 crores in H1 FY26 compared to majorly driven by the outstanding performance in domestic business and also some contribution from South African subsidiary. As we move ahead, we are confident in our ability to capitalize on this positive momentum generated by these factors. Our focus on maintaining a robust and healthy order book coupled with continuous efforts to optimize our financial structure lays the foundation for growth trajectory. As on September 30th, 2025, we have an unexecuted order book of rupees 3,591 crores, representing 3x our FY25 revenues, providing strong visibility. The order inflow of rupees during the year was rupees 696 crores. We are targeting 2,000 crores for the year. In this year, we have bagged an order of rupees 195 crores from TIPSB, which is a concessionaire for the San Pedro port in Ivory Coast. This is for testing and commissioning, installation testing and commissioning of a conveyor belt system for the port in Ivory Coast. Thank you, and we look forward to addressing any questions or concerns you might have regarding our financial performance and future prospects. I now request the moderator to open the floor for any question and answers. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question comes from the line of Rehan Syed from Trinetra Asset Managers. Please go ahead.
Good afternoon to the team, and thank you for giving me the opportunity. Sir, I have a couple of questions. First, on the revenue side. Sir, our consolidated revenue saw a sequential decline this quarter despite a strong order book. Could you help me understand what led to this softer quarterly performance? Was it site-related delays, seasonality, or is it kind of a problem of one client at year-end? This is my first question.
Yeah, so the software execution this quarter was mostly on account of monsoon. As you might be aware, this time the monsoon has slightly delayed, and there was almost 20% increase in rainfall for the country as a whole, and specifically the areas that we normally operate, whether it is Bombay, whether it is West Bengal and UP as such. So that is the main reason why there was a slight dip in the revenue performance for this quarter. However, having said that, we are quite confident that post the monsoon, the operations are doing quite well, and we should be able to make that up in the next 6 months.
Okay. And my second question is around your order book. That order book now stands at 3,500 plus crore, nearly 3x of FY25 revenue. So, sir, how much of this is executable over the next 12 to 18 months, and how should we think about the execution trend rate going ahead?
So like I said in my opening remarks, we expect the execution run rate to be 20% growth every year.
Yeah.
This order book is to be executed over 2.5 odd years of 3,600 crores. So that should be executed in the next 2.5 years.
Okay. And my last one bookkeeping question from your side, so our ROE and ROC have moderated in half on FY26 versus FY25. So how do you plan to...
Sorry, I can't hear. The voice is breaking up.
Now, am I clear now?
Actually better, yeah, but go ahead.
Yeah. So, my last question is on the ROE and ROC side. So now our ROE and ROC have moderated in H1 FY26 versus FY25. So how do you plan to improve return ratios, and what internal threshold management is targeting for selection going forward?
So ROE and ROC have not moderated because it is not an annualized number that has been given. So if you annualize it, it is 25% odd in terms of ROC and 20%, close to 18 to 90% in terms of ROE.
Okay. Yeah.
There's a note there which says that it's not an annualized number.
Okay. I'll check. I'll check in my side. Yeah. Thank you. I'll jump in the queue.
Thank you. Our next question comes from the line of Guru Darshan D from Kitara Capital. Please go ahead.
Good morning.
Yes, sir. Please go ahead with your question.
Yeah. Thank you for the opportunity. I just have one question, sir. What is driving increase in EBITDA margin and the consolidated?
Sorry, I can't hear anything from your side. Voice is cracking up. Hello?
Hello. Can you hear me now?
Yeah, much better.
Yeah, I just want to understand what is driving EBITDA margin increase in Q2 FY 26. So almost 11% to 15% in the current quarter. Is it mainly related to contract slippage? I just want to understand the drivers for it.
So it's not 11%. So 11% to 15% is mostly on the consolidated level, you're saying. So that's
Yes.
mostly on account of last quarter there was some foreign exchange loss in some of the foreign exchange subsidiaries in terms of mark-to-market loss. That is no longer there, and also stronger execution for the domestic sleeper business also helped the EBITDA margin improvement. Having said that, we expect long-term EBITDA to be between 30 to 14%. That's what we have historically guided, and that's where we should land at.
Yeah. I mean, at least for the current financial year, it should be somewhere around 15% EBITDA margin. Because the half year also returned around 14.7%.
Yeah. So we will see an annual EBITDA of between 13 to 14% going forward as well.
All right. Thank you, sir. Thank you so much.
Thank you.
Thank you. A reminder to the participants, when you are asking a question, please use a handset. Our next question comes from the line of Diya Jain from Sapphire Capital. Please go ahead.
Hello, sir. Thank you for taking my question.
Yeah, thank you.
Hope I'm audible.
Yeah. Please go
So, you're targeting a 15% growth for FY26, am I right?
20%.
13?
20.
All right. And what do you think for FY27 and FY28?
I think basically order book, the next 3 years we should be at a 20% order growth. So plus minus a couple of basis points, but I think that 20% is something that is quite achievable over the next 3 years.
All right, sir. And any investment plans as of now?
So investments in terms of capex, we do capex for the contracts. We have recently also set up a steel girder fabrication workshop with a capacity of 10,000 metric tons, with an outlay of almost 20-25 crores. And we are also looking at some other aspects of railway works, which once it's materialized, we'll come back to the market and announce the same.
All right, sir. And you mentioned that your order book execution timeline will be 2.5 years?
Correct.
Okay, sir. Thank you.
Thank you.
Thank you. Ladies and gentlemen, a reminder to all the participants of the conference that if you wish to ask a question, you may press star and 1 on your touchtone phone to join the question queue. Our next question comes from the line of Parth Kotak from Plus 91 Asset Management. Please go ahead.
Hi, thanks for taking my question, sir. So just one bookkeeping question. Depreciation has gone up by about 50% half year over half year, while the asset is not reflecting the same. What would be the reason for the same?
So there have been some recent additions to the, asset. This it's not increased by 50%, it's almost 32%, from 3.7 crores to 4.9 crores. Or even on a third basis, also from 4.2 crores to 5.4 crores. I don't know where the number of 50%.
So the H1 number has gone up from 8.13 crores to 12.
So last quarter it went up because, like I said, because of the steel girder fabrication workshop that we had commissioned. So that was a significant number. So it has gone up because of that. But other than that, there is no other significant change in the number.
Okay, noted. Thanks.
Thanks.
Thank you. Our next question comes from the line of Darshil Pandya from Fintrust Capital. Please go ahead.
Hello, am I audible?
Yeah, you are audible. Please go ahead.
Hi, sir. Good afternoon. My first question is with regards to the short-term borrowings that has, almost in a 50-60% jump from the March numbers. What has led to this, and how things will be in the next half or next year?
So short-term borrowings have temporarily gone up, like I said, because of the monsoon. There was some delay in the execution and some other invoicing as well to the customers, which led to slightly increase in the working capital days. This we expect to again normalize back to the March 25 number by the end of the year. So already we're seeing a dip as on date as well, and by March 6 we should see that number back to the March 25 number as well.
Understood. Because, our main objective was to reduce the interest cost. That was the reason we also
we had reduced the interest cost. It has been partially utilized because of the heavy monsoon in this period, but that is a flexibility that the management maintains in order to do faster execution as well.
Understood. Second question would be on the execution front, sir. Since we are guiding for this 20% growth, our H2 needs to be quite heavy compared to H1. So how are we prepared for this? How will we achieve the targets that we are doing? Because quarterly basis, we have to touch around 380-400 crores of run rate. So how are we getting ready for this?
So H1 is in typically companies of our industry is typically 40% and H2 is 60%. So if you assume that this number is 40%, then we would be doing the 20% growth this year on this basis itself.
Understood. Fine. And one final question would be on the numbers front, sir. So since we have a very good order book and we are now bidding for bigger projects also, and we have quite done well over the last 1-2 years since we've been tracking you. So just to understand what stops us to go aggressive on this number front? Can we go for 25-30% or even higher number base compared to other infra companies? Because there are some companies also who are guiding for this. But I just wanted your view to understand how things are with us. What stops us to go aggressive on this?
So it's a good question. We are quite I would not say conservative, but we are quite mindful of our margins. We have had a hurdle rate of a bit of 13%. We bid for contracts at that number. In case the contracts don't meet our hurdle rate, we are happy to let them go because we are of the view that in the long term we should be very mindful of the margin front. People can get very short-sighted and take contracts which may not be that remunerative in the short term. But as a management feel that is not the right call. So that is why we are quite choosy in getting the contracts that you do get. And honestly, I feel that 20% is quite a healthy number to grow at. In case we end up going at 25-30%, it becomes too aggressive, and then some errors can happen in terms of the pricing that we do submit for certain bids.
Understood. And any plans for going into a higher margin businesses? Maybe some projects where margins are pretty decent, 18-20%. So the overall number goes up. Do we have any plans, or we are planning something in that segment also?
Correct. So we are doing that. That is one of the reasons why we have taken this contract in Ivory Coast as well, which has a slightly better margin. And we are also looking at other, like I had also mentioned in my opening remarks, we are also looking at other railway track items and other fittings for railways as well, which will improve the margin on an overall basis as well.
Understood. I'll get back in the queue, and condolences to you and your family. I'll get back in the queue. Thank you.
Thank you. Thank you for it.
Thank you. Our next question comes from the line of Shivom Revankar, who is an investor. Please go ahead.
Hi, can you hear me?
I can hear you. Please go ahead. Thank you. Sorry, you are fading off.
Yeah.
Hello?
Firstly, condolences to your family for loss of our chairman, Atul. And my question is, now this project that we won in Ivory Coast, I'm aware that Namibia, South Africa, Ghana, these are the places that you had your presence already. So how do we plan to execute a project in a country where I'm assuming there was no presence?
So Ivory Coast is a country which is neighboring to Ghana. We already have a presence, like you mentioned, in Ghana. We have a full team there, and that will they will be able to manage their entire affairs. It will also help us save on some of the overhead costs as well. And
Sir.
that is one of the reasons we have taken this contract, and hopefully it should be quite profitable for the company.
I see. And what are the margins you're looking at for that particular project? And is it like a joint venture or is it fully?
No, it's not a joint venture. No, it's not a joint venture. It's simply in our name.
Okay.
On the question of margin, it would be around 18 to 20%.
Yeah, I see. Okay. And do you expect any, initial mobilization costs because it's a new territory?
No, the contract has a provision for paying mobilization advance, which we will be utilizing.
Okay. And what was the reason primarily that, picking up this project now and not earlier? Do you see a slowdown from, these Indian contracting bodies like NHAI, which is the reason why you thought this was a, prudent strategy pivot?
So we have been trying for this for quite some time, for the last more than 6 months. And honestly, there's no intention of digressing from the domestic business or the domestic order book. Having said that, the domestic order book is having a lot of competition. So we thought that it would be a good thing, a good blend to have in terms of some higher margin contracts, and that's why we did that.
I see. And what's your outlook personally, Atul, in terms of projects such like within that geography? Do you see any plans for going higher and aggressive to explore more such projects, or is it like a one-off opportunity?
No, it's not a one-off opportunity. We're looking at similar contracts as well. But and Africa is a continent which takes its own it's a slow pace, and you need to have patience. So you can't expect anything to happen overnight there. So
yeah,
we are in talks with a couple of other agencies as well. Let's see how that pans out.
I see. So now, the guided order book is 2,000 odd crores, which means an incremental 1,400 crores something needs to come in. So what percentage of that do you expect from, that geography in Africa?
Maybe about 150 crores, 10%.
I see. Okay. And, this projects that you've targeted there, you're mostly into infrastructure. You're a specialist in railway bridges, but this project is really some industrial conveyor belt manufacturing facility. Does that stem from your experience with concrete manufacturing facility, or what is the basis of expertise and confidence that you took that kind of project?
So it's not we don't have to set up a facility for conveyor belt manufacturing there. We need to supply, install and testing and commissioning of that from India. Like I said, we have set up recently a steel fabrication manufacturing workshop in West Bengal. So that will kind of enable us to use that capacity, and we'll be able to supply from there as well, part of the things. And some items will be also outsourced from the market.
I see. Okay. And do you also see this as a gateway to bid for, bridges and roads in that geography as well?
It depends on the line of funding, but yes, we are open to that idea.
Okay, sure. And last few months have been quite muted in terms of any order wins from RVNL, NHAI, etc. Do you expect any traction going forward?
Yeah, obviously, like I said, 2,000 crores is the total order book that we have guided for in this financial year, and we are quite confident of hitting that number. Okay,
and that 2,000 crores means your order book is then going to be sort of in the 4x range. Will that mean?
No, it won't be in the 4x range. It will be almost 3.2x, because we will also be executing close to 900 odd crores. Or maybe 800 odd crores this in this second half as well.
Okay. Because in terms of your balance sheet, your capacity utilization looked quite big again, but I understand those monsoon. But yeah, anyway, good luck, Atul, and condolences again.
Thank
Thank
you.
you.
Thank you.
Thank you. Our next question comes from the line of Pranav Pal from Prudent Equity. Please go ahead.
Hello, good afternoon. Am I audible?
Yes, you are.
Yes,
Please go ahead.
Sir, my first question was for this 20% growth that you're guiding, you need to do around like 30% growth in H2. So how confident are we that that's actually going to happen? Because I agreed that Q2 is a little weak, but even in the last second quarters, you're able to show growth. But this Q2 was a little underwhelming. So,
So I think, like I said earlier, H1 is generally 40% of the overall year. So if you compare H1, if you assume that H1 is 40% for the overall year, then we are hitting a 20% number for the full year, for the balance 60%. The balance 60%, we would be expected to do about close to 375, 380 crores in terms of execution to hit that number, and we are quite confident of doing that.
okay. And my second question was, what percentage of your order book would be in JVs?
I don't have an answer to that offhand. We can come back to you on a one-to-one basis.
Okay. Okay. And lastly, what's the status of your pledge? Do you plan to reduce it going forward, or if you could share some light on that?
Sure. So the pledge of 51% shares of the promoters is towards the working capital limits of the company and not for any other purpose. We have already applied to the consortium banks to reduce that, and it is being evaluated by the consortium as we speak.
Okay. I'll mail you regarding that JV thing. Okay? Thank you.
Yeah. Thank you.
Thank you. Our next follow-up question comes from the line of Diya Jain from Sapphire Capital. Please go ahead.
So thank you for taking my follow-up question. So you mentioned that you expect 18 to 20% margins from the Ivory Coast order. So is that an EBITDA margin you are targeting?
Yeah, obviously. It's at EBITDA level.
So can you also provide a number for the Agra Gwalior Highway project?
We don't provide on a project basis. We don't provide the margins on a project basis. That's something that is confidential.
Okay, sir. And what is your current capacity utilization?
For what? For which plant?
For all the plants.
So total capacity utilization is close to 51%.
And what would be your optimal?
70-75.
All right. Thank you so much.
Thank you.
Thank you. A reminder to the participants that if you wish to ask a question, you may press star and 1. As there are no further questions, I would now like to hand the conference over to the management for the closing comments.
Thank you everyone for your questions, which I hope we have been suitably addressed. In case you have any further questions, do reach out to us and have a good day. Thank you.
Thank you, sir. On behalf of GPT Infraprojects Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.